Hi, my friends. You're welcome to tonight's bulletin. You're welcome to the family. Those were the words of the managing director of GCB Bank, resold to staff of the Defunct Capital and UT banks. Speaking with journalists in Accra after the bank acquired the two failed banks, the managing director explained that staff of the Defunct Bank ceased to have any ties with the erstwhile banks when the takeover took effect. There is more in the following report by Ebenezer Sabote.
GCB Bank assumed the customer deposits and selected assets of UT Bank and Capital Bank when the Bank of Ghana revoked the licenses of the two and approved a takeover by GCB Bank. As he welcomed staff of the Defunct Bank, Managing Director of GCB Bank, Soa, confirmed some staff of the company will be affected by a restructuring exercise to be undertaken.
Welcome the employees of these two institutions into the GCB family. As we continue with the integration process, we will review all the current positions and situations against the planned strategy, organizational structure, and staffing requirements of the expanded GCB Bank for right sizing. As a result, some jobs may eventually be affected, but we shall take steps to ensure we minimize the adverse impact of this integration. GCB, with the experience and capacity of running a sustainable and profitable institution over 6.5 decades, has the mettle to take these two institutions to build an even stronger bank.
The MD also assured customers and shareholders of the safety of their deposits and went ahead to share what their new bank has in store for them.
The network of the bank at the current 214 as against the pre-assumption spread of 161, positions GCB to attract deposits from various sectors and parts of the country at a much lower cost. This will enable us to on-lend at lower interest rates for the benefit of the SME sector, long identified as the backbone of the national economy. Relationship managers of the bank will stay in close contact with our SME and corporate customers to ensure that we provide them excellent service that will promote the sustainability and profitability of their businesses. I want to assure all stakeholders that you have a partner in GCB, which provides you the backbone of a resilient institution and which is in the business of supporting businesses to realize their dreams.
GCB Bank also described the development as an opportunity for it to expand and improve on its branch network as well as services in general.
Meanwhile, GCB Bank says it's early days yet to make a decision on the fate of the workers of the two banks. There have been reports that more than half of the workers of UT and Capital Bank could go home possibly after 6 months. But answering questions from journalists on the takeover, Managing Director of GCB Bank, Soa, said a decision can only be made after PricewaterhouseCoopers completes its assessment of the situation.
They have to speak to the receiver. The issue about jobs, which will inevitably go, we shall conduct a skills assessment. As part of the integration process, we need to know that we can bring everyone on board or we can't bring everyone on board. This is an expanded institution, and as we go through the integration, we shall know what jobs to close down and what jobs to retain. I intimated when I spoke about the revocation of the licenses of the two institutions that from that moment on, the employment with their previous employers ceased. All claims, therefore, will have to go to the receiver. We cannot speak to that. What we can speak to is the fact that they are working with us for the moment. They are new employees of our institution, and therefore we shall look to see if we can keep them or if we can't keep them. As to what happens in terms of the resolution of the contracts that we give them, it's another matter which we'll handle internally. Now, you wanted to know the worth of the two banks. I want to assure you that that is also privileged information. All of this has had to be handled with a very high level of discretion, okay? And it is not my place to disclose these things.
Well, still on the fate of the workers, financial analyst Charles Mercer rather thinks workers of the two failed banks have an opportunity to justify their inclusion. Here's his explanation.
I noticed by the press release that most of the workers are going to keep their jobs, but they won't keep their titles. Because if you were a bank or a branch manager in the particular bank within UT or a director within UT or Capital Bank, but Ghana Consumer itself may have directors also. So there's no way you're also going to be director. So job title will change. But in terms of keeping you in the company, in the totality of the company, I think some of them would always will have their job. You know, in future, if they lose their job, then they are losing their job because of performance, not because of the takeover. And that's what I sensed from the Bank of Ghana directive that they brought. So it would be maybe justify your inclusion. They may be coming out with the new ideas because in the past they may be limited in the implementation of the ideas because of the funds that were available. But with the Ghana Commercial Bank coming into being, maybe with that deposit base secured, some of the ideas could come in and they will implement it. Who knows? Maybe in a couple of years' time, they rather will be the strongest bank, and then they will begin to break it out and have specialized areas within the banking industry.
Well, the minority in Parliament has also been reacting to the latest developments in the banking sector. They are actually blaming the Bank of Ghana for the collapse of the two banks. They organized a press conference where former Deputy Minister of Finance, Kaysel Atuforsen, said the situation could have been avoided if the regulator played its rightful role. The minority is also demanding that the regulator makes public the recent report which sought to assess the health of the banking sector. Let's watch excerpts of that press conference.
The P&A transaction follows other precedent approaches that had been used to deal with difficult banking situations in the country. For example, the setting up of the Non-Performing Asset Recovery Trust, which is popularly called NAPAT, and the winding down of the Banks for Credit and Commerce, BC, the Bank for Housing and Construction, and of recent, the Merchant Bank. We also note that during the press conference on the P&A transaction, the governor of the Bank of Ghana assured that the approach has a distinct benefit where customers will suffer no losses. The acquiring bank, being GCB, will increase its market share, while the productive financial asset of UT Bank and capital assets. We take note of the news and urge all depositors and customers of the UT Bank, Capital Bank, to exercise some restraint whilst we patiently monitor the activities of the acquiring bank, GCB, Bank of Ghana, and the receivers, in this case, PricewaterhouseCoopers. We strongly urge these three institutions, being Bank of Ghana, GCB, and PricewaterhouseCoopers, and in this case, Ministry of Finance, that could assume any ultimate fiscal risk under the banking laws to ensure strict adherence to distinct benefit of the purchase and assumption transaction, so that no single depositor loses his or her investment. Needless to say, should this happen, it will result in an unforeseen burden on taxpayers instead of the original owners of the UT and Capital Bank. Ladies and gentlemen, again, we urge Bank of Ghana to ensure that the acquiring bank, in this case Ghana Commercial Bank, which is the largest indigenous bank with both private and public shareholders, is not overburdened unnecessarily with non-performing loans and impaired assets. It is important for us to stress that since Ghana Commercial Bank, or GCB, popularly called GCB. It's a listed company. We are hoping that at the minimum, shareholders' resolution was passed before this major transaction was taken.
And you know, it's not just the minority that has concerns. The acquisition of UT and Capital Bank by GCB Bank has not gone down well with some players in the industry. They have concerns about whether the necessary regulatory approval was secured. We'll tell you more in the following Business Desk report.
For many, such transactions should have indeed been approved by the industry regulator, but was it actually done? What about concerns that this move should have been placed before shareholders at an EGM? Was it right for just the two majority shareholders to push this move? And was GCB forced to take on these banks, especially when we understand that the bank was interested in merging with NIB? And how good are the good assets of UT Bank and Capital Bank? Could any hidden toxic assets hit the books of GCB, impacting on its financials badly? And as a listed entity, why was the deal shrouded in some secrecy, especially when it's a listed company? However, how much is GCB paying for this acquisition? And a careful look at the questions and answers released by the Bank of Ghana showed that the acquisition was part of efforts to extend its reach and grow its balance sheet to support banks in bigger transactions. So was it actually planned?
Well, GCB is taking steps to secure all the customers of UT Bank. To this end, the bank is assuring customers of UT Bank of some innovative banking services and excellent customer experience. This was contained in a notice sent to all customers of UT Bank today. Well, the bank is also keeping to banking hours operated by the former bank UT, that is 8:30 a.m. to 5 p.m. But what about the shareholders of UT Bank? What happens to them? Let's get some insight from stock analyst Bertha Atibigal joins me on the line. So, Bertha, a bit of an education. What usually happens in situations like this when there is a takeover and there are shareholders involved?
Okay, thank you very much, Daryl. Before I even focus on the takeover, let me just brief our viewers something on what actually happened today when GCB had a press conference. Now, there was a meeting with the brokers and other the financial analysts, and what they stated is that they have not actually acquired the bank yet. They haven't acquired Capital Bank and then UT Bank yet, but they have assumed some of all its liabilities. And the liabilities here I'm talking about is the customer's deposits and some sort of investments that clients have with these banks. But they are yet to they are yet to look at the assets of these banks before they think of which ones they should go in for and the ones they shouldn't.
Let me just butt in here. When they say they have not acquired the bank yet, what do they mean? For people watching and wondering, what are you telling us now?
When we say the bank has been acquired, as in they have bought the bank. But in this case, they haven't bought it yet. And they are actually interested in some of the assets of the bank and not the entire bank, or let me put it that way. Right now, the receiver, that's PwC, is in charge to do all the cross checks for these companies, these banks, to ensure that everything is okay. And GCB is going to use 30 days to do its due diligence to select the assets that they want to take as an institution. And they are not actually, when it comes to the shareholders, they are not taking responsibility of the shareholders of UT Bank that's listed on the stock market. And we know now UT Bank license has been revoked, it's been taken, and they can't operate. So GCB is stepping in as a bank to actually make banking operations go on. That's why they have assumed the liabilities, as the customers' deposits and other investments that clients would have had with these two banks. And what will happen is that GCB will negotiate with these clients of the banks, especially those who have investments with them. For instance, if GCB is giving out fixed deposits or treasuries as maybe roughly, let's say about 15%, and then UT Bank is giving it out to about 30% or 18%, then they have to renegotiate with these clients to come to an agreement. I hope you get it.
That makes a lot of sense.
Yes, so they have to renegotiate with these clients to get to that point. And now the receiver, PwC, has to do all the cross checks to ensure that all debts and liabilities are actually brought out. And when these are done, actually for the shareholders, now what happens when there's liquidation of these financial institutions is that the shareholders are always the last to be paid. Okay, they will have to pay off other debts before they think of the shareholders. If you have preference shareholders, then that's where they will come in. But this is a case where we have shareholders. And here, GCB is not taking responsibility of shareholders of UT Bank on the Ghana Stock Exchange. So what will happen is that the shareholders will just have to hold on because, one, we have regulators, we have Bank of Ghana, we have the Securities and Exchange Commission, we have the Ghana Stock Exchange. And these bodies are to ensure and protect investors and shareholders. So I'm sure they'll come up with some line up and strategies to actually help these shareholders get some funds out of what the investments they made in UT Bank in the case of buying into their shares. Yeah.
Great. Okay, so let's talk about how the markets have been reacting to this. It's been a little over a day. What has the movement been like?
Okay, let me start with GCB, since it's been in focus and been in the headlines lately this week. So it traded only 200 shares at 5 cedis 14 pesos per share. It didn't have any price changes. We had 2 trades going on in GCB today on the stock market. Access Bank, however, added 50 pesos to its opening price of 4 Ghana cedis to close. It lost 50 pesos to close at 3 Ghana cedis, 50 pesos per share previously, or it opened the day at 4 Ghana cedis per share. BOPP advanced by 3 pesos to close at 5 cedis 12 pesos. Previous share price was 5 cedis 9 pesos. And then we had Cal Bank remaining at 91 pesos per share. And then some other equities as well. We didn't see much changes in the prices of Total. We didn't see any changes at all. Total, Societe General, SIC, Standard Chartered Bank, MLC, HFC. HFC went up by 5 pesos to close at 85 pesos per share. GCB still at 5 cedis 14 pesos. EPI 14 pesos per share. And then EcoBank also traded at 7 pesos per share. Car 91 pesos per share. So in all, we had 88,430 shares trading on the stock market, giving us a sales value of about 362,069.50 Ghana cedis.
Oh, okay, so Bertha, just before you go, a quick recap on what we know was the outcome of the meeting between GCB Bank and stockbrokers as well as financial analysts.
Okay, I have already tackled on some of them. Some of the specifics that he talked about was that they were not taking full responsibility of shares of UT Bank. They are actually assuming some liability, all liabilities, and these liabilities is the customer deposits and then other investments that clients have with GCB. And they also stated categorically that they haven't bought the bank yet. They have just assumed some of the liabilities, but they haven't bought it. And they have come in to actually make banking business continue with these banks. That is UT Bank and Capital Bank, so that clients can continue to do deposits. And one advantage, or one thing that GCB is looking at is that this strategy or this step up that they are actually taking is going to be a benefit to the company. That is what they are foreseeing. That is what they are saying, that it's actually going to benefit them in a way because, one, the total customer deposits for Capital Bank stands at about 1.3 billion, and then UT Bank is about 848 million. So they are looking at a minimum of about 1.1 billion customer deposits from these two banks, and that is going to go in their favor, or that's going to make that's going to be beneficial to GCB. And then they are not expecting to make any losses, or they're not expecting any devaluation that to devalue the value of the bank, that's GCB. No, but they are looking at getting the best from this very big strategy and initiative that they are taking as a bank. And now Capital Bank has about 28 branches, UT Bank about 25. So now GCB is operating in all these banks.
All right, Betha Tubiga with that update over there. Thanks very much indeed. Just to sum up some of the things she's been saying. So essentially from the meeting between GCB Bank and shareholders, we're hearing now that GCB Bank is saying that they haven't bought both banks. They have just assumed control of the liabilities and the assets. And GCB Bank also saying that it is not going to take full responsibility for the shares of the shareholders. They'll bring in more on this as the days go by. But still on this subject, the collapse of UT and Capital Bank has again reignited fears about the health of the banking sector. The industry has over the past 4 years witnessed some interesting developments like non-performing loans rising, which threatens its stability. But is it a problem with supervision, the economic environment, or is it just a case of misplaced priorities on the part of these banks? There's more in this report.
For many, yesterday's development showed that all is not well within the industry and the possibility that other banks could go down very soon if the Bank of Ghana should really enforce its laws. And what about the timing of the central bank's action? Would that have really happened if the country was not under an IMF program or the pressure from the fund to deal with its issue before its board meeting by the end of this month? Let's also throw the spotlight on the recent assurances from the Bank of Ghana about the soundness of the industry and the fact that 7 remaining banks that were identified in the recent audit by some accounting firms will not go down this route. The total average of the loans that the banks fear might go bad, or call it non-performing loans, have reached 21% as of June. This could mean that 1 out of 5 loans held by every bank could go bad, and looking at the fact that the banks survive on deposits and loans is a burst imminent. Again, for the entire banking industry to be well capitalized, they should have a capital adequacy ratio of 20%, but check shows it's below that. The Bank of Ghana's banking report as at May showed that the capital adequacy ratio is 17.5%, whilst non-performing loans stood at 21.7%. Definitely, there's something wrong. A development that could mean that a lot of smaller banks might be in deep trouble. But is the Bank of Ghana's fear of sending signals that the industry is not that strong, forcing it to be too careful at the punishment of the banks? There are reports that there were some instances that the 2 banks in question granted loans above their limits. But was this done on the blind side of the regulator? Or this challenge with the industry has emerged because most of the banks are just not being prudent with their funds? UT Bank and Capital Bank had huge indirect loans with other banks. So this mess, as some are calling, are yet to be contained.
Okay, let's shift topics, talk about the Joy FM Technology and Innovation Summit, which took place today, where the head of mobile financial services at MTN Ghana, Elihene, has kicked against the introduction of taxes in mobile financial services, saying it can't discourage customers, which impedes the growth of the sector.
I remember the whole conversation around VAT or taxes on financial services or banking services. It's come and gone. And I'm sure it's come and gone for very good reasons, because we want to ensure that we have the confidence of the people you are trying to attract into the space. We are trying to bring the informal people into the banking space or into the financial space. You want to encourage them as much as possible. These are times where you put incentives that would motivate people to want to go this route, rather than putting in something which already stifles his interest in the service. So I don't think that smartly looking at where we want to go, bottom of the pyramid, bring many people on board. Because today, if you heard Doc, we are talking about 1.8 billion Ghana cedis, which would have been in people's pockets, agogloshi, everywhere. They are now in the banking space. If you have been able to mop up that kind of money, then more and more people coming in will bring more and more money out of the system and improve our, Doc will say, monetary policy conversations at that. Then the second thing I want to talk about is that within the mobile money space itself, there are some erroneous impressions that people carry. When people see mobile money transaction values, either they interpret it as revenue or they interpret it as all earning fees and commissions. But that is wrong. Let's understand it that of the mobile money transactions that we deliver, the values you see are the actual amounts that people have moved for one service or the other. Number two, over 80-85% of those transactions pass for no fees at all.
And we'll have more on Justice 2017 in our subsequent bulletins. We are moving now to our interview of the day. And banking analyst Menson Tokonu has challenged the new board of the central bank to do more to push down interest rates. Ghana has one of the highest interest rates in the world, with the average base at 26.3%, while its policy rate, that is the rate at which the central bank lends to banks, is at 21%. Bank depositors have lamented the high interest rates despite the drop in the policy rate. Speaking to Joy Business, Mr. Tokonu also had this advice for the central bank as it gears up to increase the minimum capital requirement for banks in September.
Interview of the day.
I think one of the key things that we're looking at the policy rate, and I think they're also going to be looking at the new capital for banks. But I think one of the things also they should also look at is the value of money that is being kept with the liquidity rate. They should look at the liquidity rate. If they increase the minimum capital, then I would advocate that they should release the liquidity rate that banks keep with the central bank, because that will become money available to be able to do business with. So what we think we should do is that when Bank of Ghana reduces the policy rate, then there would be public education that there is no way anybody will be getting 30%, 32% again. And once that is done, for example, if cost of capital is about 15%, everyone will enjoy. You take money from the banks and you do business, and everybody, the economy will become very robust. And I think it's very right that it's going to be, but then they should also look at what they can do. It may not be drastic. It took some time before it went up, and it should take some time to come down. But I think they should do it very quickly.
Interview of the day.
All right, there's more news on our website, myjoyonline.com/business. My name is Darryl Carl. That'll be it for Business Live. I'll see you tomorrow.